Hello friends, welcome back. In this quick demonstration, we are going back to our rankos and flex rankos discussions. We made a bunch of videos on these earlier to maintain the true sense of the higher time frame trend. We can use rankos 1936 or you can use flex rankos with some pullbacks, and you can see the settings here. You need to find a way to be able to look at the higher time frame walkthrough. You must have heard the term called multi-time frame, and that is what we have been doing, having the measured moves on the 36 Renko and 19 Renko. And once you have that, you can pretty much put any oscillator. Here on the bottom I put awesome oscillator. It doesn't matter because since you have taken out the time noise from the system, you have an effective trend. Alright, so this is telling us the direction we want to trade, and we're hoping that the trend will last enough for us to get some profits. On the right side, we have same thing. We have a higher time frame on which we have done nothing else but put Keltner channel and Bollinger Bands with default settings. Nothing has happened at all. Everything is free on every system, but what we have done is we have interjected the higher time frame and overlapped the two time series. So the indicators at the higher time frame and Renko and timeless bars are giving us the bias where we want to take the trade. And as you can see, it gives us a very beautiful information once we do that. So you can see here at this point the trend has, if you look at this oscillator above 0, below 0 as a trend identification, what we have done is we have taken up to the long bias on this side. Once this has happened, what we want to do is just look for longs only, and we can look for pullbacks. Now I'm running this on 1597 tick bar because these are all Wall Street internal algo numbers. I just bring them over. It may not mean anything to you, but there it is. All right, so we're running this on a execution chart which is 1597, and then we have the higher time frame Rankos clarifying to us the trend. And you can see the inside bands, the skinny two color bands are Bollinger, outside is Keltner, not changed anything. Alright, so this is pretty clear. Now what we have to do is, once this is on the left side, our awesome oscillator is bullish, we're just gonna stay long. And if you catch the first good trade, there's no reason for you to be scared out of the trade. And you can see this is the mid moving average of the Bollinger Band. And what has happened here? There's also, I have one more indicator called wave indicator here, don't worry about it. These two green lines, they are the channels. We are staying above those channel lines. It's like a breakout, but you can, since you cannot, this is custom thing, but you can see. So now you look for it can be any oscillator now, right, if you want. So the pullback happened here, breakout happened here, right, late night, 5 o'clock in the morning, and there we go. So this is what Gann was also suggesting, that you have a 45-degree angle which is going to keep you in the trade for as long as possible. So anyway, so there it is. And look at the oscillator, awesome oscillator right here, right? Tells you to stay on, and you got the entire move. This is how, this is just the scratching the surface kind of scenario. All right, and then what happens? Oscillator went down. It happened just right today. We were already out, day is done, goodbye, enjoy the turkey. But here it is. The higher time frame has shifted. And now you can see the bands are on the other side and they're coming inside again. We are going to look for a pullback. So pull back to the other side of the channel. You can see here red Bollinger. If you want to keep adding, Gann was master of adding. Once he identified the trend, he will add, and that's pile up his luck. That's what we do, right? This is what you have to do. Trading 15 lots, ES, full lots. I mean, people trade 100 lots, right? I don't go beyond 10, 15 because psychologically 20 lots, 50 lot, 100 lots is too much to handle. Even if you have money to do it, just want to you focus on your accuracy more than volume. All right, same thing. Now trend has shifted down. You can just see on the left side that this guy told us awesome oscillator because of the Renko structure. You can copy it here, Flex Renko, right here. People are selling this on the internet. You can buy that too, whatever rocks your boat, but right here, short, right? And then obviously we have looking inside the bar scenarios and the targets, and we have C54. We have a lot of things going on. We know where they're going. Anyway, this is the simple layman term. Pull back to the blue. Boom. All right. So this awesome told us to go short and stay short for a while, right? There we go. And things are gonna, this is just a rally and a pullback, and then I was gonna go rally again, and you can see oscillator is right here. Right, so what are we gonna do? Let it come back to lower side of it. Now you see this channel bands, which are lightweight, right? These channels are telling you it's like acting more of a breakout, staying above the channel or below the channel. You can treat it as a moving averages, two moving averages. So staying below the channel, the trend is down. But we're not trying to pick the top tick and the bottom tick. We are trying to get in the trend and stay in the trend. So we are here. Oscillator is telling us it shifted here. We just have to take one breakout. With 5 points, you can easily get 5 points, 10 points, 5 points. But if you get a good trade, stay in the trade. That's the whole story. Sideways also, now you can go this way, you can go any day you want. The story will not change. This is how big money is made. Now we are gonna go long, but look at these channels, right? We broke out of the channel, the skinny lines. I'm not talking about Bollinger, I'm not talking about the Keltner. Broke out. I'm looking for a pullback. Right? The risk is always at the first trade when the trend is shifting, because it could be going sideways and then making the next leg. So you have to be mentally prepare yourself for that reason, right? So here it could have gone down, it could have gone up. Right now we're in the channel, right? That's why we don't know what's going to happen. It can go down. Channels are flat. Now channels are broke out, and channels are now going. They're staying above the channel, and there we go, right? So now I got a good trade. I got 10 points, and now I should be done if that's what you are looking for, right? $5,000, boom, with 10 lots. But the risk is there. But now looking at the oscillator is telling us that, hey, this trend is on. The Renko is staying long only. So you broke out and you came back to test this Renko. Now this Renko is broken into quarters, and we do a lot of things with that. But there we go. Right, so now the channels are green and they're pointing. It broke out, came back into the channel, let it break out again, and there we go, boom. Why? Because look at this, awesome oscillator is on the positive bias. You're in a positive bias. Positive bias. See at this, the green, the skinny ones. I didn't make it fat because there are already so many fat lines here, and that's all there is. And this is what is going on right now. You can just see this. Okay, I hope this helps. Just wanted to remind you how multi-time frame and Renkos we spoke about. We did our Ranko business as well on 36 Ranko and measured moves. There are videos on that, how to set it up and how to measure them. And I hope this gives you some ideas here to be staying in the trend effectively. Now, this can just be a blip, come down. We don't know. It could just become a very good trade, retesting the top and maybe blowing through the top to go to 4600. We don't know that. We don't need to know about it. But remember, we're not discussing anything about how do you find the targets, how do you find reflection points, and where are we going. This is hardcore, pure, technical, multi-time frame trading. I hope this helps. Thank you very much.